The Cardano DeFi ecosystem has been absolutely buzzing with activity lately. But, with so much happening, it's pretty easy to get lost in all the noise. So in this explainer, we're going to cut through all of that and focus on just one thing: finding the real signal.
So what is the real signal here? Well, to find it, we need to look at three key areas that kind of tell the whole story: the actual profits being generated, the innovative technology that's being built, and of course, the core principles that are driving it all. So let's start with the money.
First up, the results. Because let's be real, in DeFi, all this activity ultimately has to translate into actual financial outcomes. And on Cardano, the numbers, well, they're starting to tell a very, very interesting story.
Okay, let's start with Strike Finance. They've just crossed a huge milestone, generating a combined total of 3.5 million ADA. And that's not just for them. That's for their token holders and their liquidity providers, the users who actually supply the assets to the protocol. This isn't just some number on a screen. It's real value being created and shared directly with the community.
And just to put that into perspective, let's zoom in on a single month. In September alone, Strike Finance generated over $450,000 in revenue. That shows this protocol isn't just running on potential, it's a profitable venture, like right now.
And hey, don't just take my word for it. An external analysis by Waffle Capital recently put Strike Finance among the top 10 most profitable derivatives protocols. That kind of third-party validation, that's exactly the kind of signal we're looking for.
And this profitability isn't just isolated to one protocol. If you look over at Surf Finance, in just their first 99 days on the mainnet, they've already paid out over 87,700 ADA in staking rewards. That's the yield that gets paid to users for helping secure the network. It's a really clear sign of consistent early-stage growth.
This chart really shows you just how widespread the activity is. Rewards are flowing all across the ecosystem. You see Bodega Market distributing over 7,000 ADA and Angel Finance handing out over 4,000. The key thing here is that value is being generated and shared across multiple, diverse protocols, not just one or two big ones.
So we've seen the protocols are profitable, but how are they actually doing this? That brings us to our second signal: the constant innovation and the new features that are driving all this growth.
Let's go back to Surf Finance for a second. They're tweaking their protocol to give users more choice. So now you can access higher leverage, which basically means borrowing funds to make your trading position bigger. This means the potential for much higher gains, but yeah, it also comes with higher risk. It's that classic trade-off, and they're putting the power to make that choice right in the user's hands.
They also just launched this fantastic, really user-friendly feature. Instead of having to find new funds to pay back a loan, you can now just use a portion of the collateral you've already posted. It's a simple, three-step process that makes the entire experience, as they say, as smooth as surfing the waves. Pretty slick.
And what's the direct result of user-friendly updates like these? Better yields, that's what. By cleverly accounting for ADA staking rewards, Surf has been able to boost its APYs. The Bitcoin pool, for example, is now earning over 11% APY. In a world where your traditional savings account offers you next to nothing, that is a highly competitive rate.
And again, this innovation is happening everywhere you look. Pulse is integrating with Indigo to bring in synthetic assets. Those are tokens that mimic the value of real-world stuff like stocks or commodities. Wingriders just hit a huge milestone, completing all of their proposals from Catalyst Fund 13. All across the board, we're just seeing this constant stream of development.
Okay, so we have profits and we have features. But there's a third really crucial piece of the puzzle that some of these protocols are laser-focused on, and that's the underlying philosophy of what real DeFi should actually be.
This quote from Danogo Finance just gets right to the heart of it. They're making a crystal clear statement about how they're built. By pulling prices directly from decentralized exchange liquidity pools, they're making sure users are trading against the actual market. This is a really fundamental point, so let's break down what that even means.
So what is a centralized oracle? Well, think of it as a single trusted messenger that tells the blockchain what's happening in the outside world, like the current price of an asset. And while that's useful, it creates this huge vulnerability. If that one messenger is hacked or delayed or even tricked, the entire system can collapse. By avoiding this, projects like Danogo are building a much more robust and truly decentralized foundation.
Okay, so we've looked at the profits, the products, and the philosophy. Now let's connect all the dots and see what the complete picture really looks like for Cardano DeFi.
So, when you put it all together, the real signal becomes crystal clear. It's not just one thing. It's the convergence of three really powerful trends. We have tangible financial growth, we have constant technical innovation, and holding it all up is this deep commitment to the core principles of decentralization. Now that is a powerful combination.
So the foundations are laid and the engines are clearly running. You've got profits, products, and principles all aligning. This isn't just random noise, people. It's the clear signal of an ecosystem that's not just surviving, but is actively building and maturing. The only question left is, how high can this momentum take it? Thanks for watching.